All right, let's cut right through the noise. Today, we're going to tackle one of the biggest headaches for swing traders: how to find support and resistance levels that actually matter. Let's get right into it. So let me ask you something. Do your charts ever end up looking, well, like this? A total spiderweb of lines where it seems like every single dip and peak has a line drawn through it. It's just overwhelming, and honestly, it can leave you completely paralyzed. But what if I told you the problem isn't that you're drawing too many lines? The real issue, the thing that's causing all that clutter and analysis paralysis, is the time frame you're starting on. So many traders get lost in the weeds of the daily chart, and it's killing their clarity. So what's the fix? Well, it's actually way simpler than you might think. We just need to zoom out. The whole solution is about getting that big picture view, and we do that by starting our analysis on the weekly chart. This is where it all starts to make sense. Now, why is the weekly chart so darn powerful? Think about it. Every single candle you see represents an entire week of market action. All the buying, all the selling, all the drama. This automatically filters out all that day-to-day noise and just shows you the moves that are truly significant. I mean, this slide really says it all, doesn't it? On the left, you've got the micro view, starting with the daily chart, which just leads to clutter and paralysis. But on the right, the macro view, starting with the weekly, gives you these beautifully clean charts and real strategic clarity. It's a complete game changer. Okay, so that's the big idea, but how do we actually put this into practice? Let's break down the top-down method. It's a super simple process you can literally start using today. It's really just 3 simple steps. First, you pull up that weekly chart and you only draw lines on the most obvious swing highs and lows, the ones that jump right out at you. No searching, no squinting. If it's not obvious, just ignore it. Then, step 2, you pop down to the daily chart just to confirm how those same weekly levels look. And finally, step 3, you just wait. You watch for how price reacts when it gets to one of these major confirmed levels. That's it. You see, this all comes back to a really important philosophy. Keep your charts simple and clean. The weekly time frame is how we achieve that. This is all about trading what you can clearly see, not what you think might be there. Okay, now if you're ready to level up your analysis, we can add another layer to this. Let's talk about an advanced technique, harnessing the incredible power of the monthly time frame. I want you to think of monthly levels as the absolute bedrock of the market. They're like these powerful anchors for price that can stop a trend dead in its tracks. Now, you're not going to find them on every chart, but when you do find a clear monthly level, well, that's information you cannot ignore. So you might be wondering, okay, but won't odding monthly levels just clutter my chart again? Great question. And the answer is super simple. Color coding. You just give each time frame its own color. For example, maybe you make your strongest monthly levels green and your key weekly levels blue. This tiny habit makes your chart instantly readable. You know the strength of a level with just a glance. All right, enough theory, right? Let's see how this stuff plays out in the real world. We're going to look at the pound/Swiss pair here. As you can see, price was in a really sharp downtrend, and it was getting close to a key weekly support level that, trust me, a lot of traders were watching. And here's what happened. Price came right down to that weekly level, the blue line, and just blew right through it. No bounce, not even a pause. It was like the level wasn't even there. Now, this is exactly where traders who only look at the weekly chart get totally smoked. But look what was waiting just a little bit lower. That green line. That was our monthly anchor level. And what did price do? It came down, tapped it almost to the pip, and then reversed so hard it left that massive wick. I mean, come on. This is a perfect illustration of the hierarchy of levels. The market will almost always respect the stronger, higher time frame level. So, let's bring it all home. We're going to distill everything we just talked about into a few key takeaways that will literally take you from charting chaos to total clarity. Okay, let's lock this in. First things first, stop trying to find every little level on your daily chart. It's a losing battle. Instead, start on the weekly to find those huge, big picture levels. Then, and only then, you can use the daily chart to confirm them. And for that extra edge, go hunting for those monster monthly levels and give them their own color. Just remember, real clarity doesn't come from having more lines. It comes from seeing the market from the top down. And that leaves us with one final thought. Using this method does more than just clean up your charts. It gives you a map of the market's most important battlefields. It shows you exactly where the big fights between buyers and sellers are going to happen. So the only question left is, Now that you can find the battlefield, how are you going to choose your battles?